Hey traders, Raghee here. We're going to take a look at 4 markets that have nothing to do with the NASDAQ, the S&P, and the Dow. So you're going to want to stick around for this one because the whole idea is where can we focus on markets that are not going to be caught up in what I think is some end of quarter rebalancing shenanigans, and how can we focus on trends that are not driven by FOMO, but rather driven by actually the same thing that we've been taking advantage of for the better part of this year, those macroeconomic inflation trends, or more specifically, what sectors, what stocks, what indices, what markets are going to move because of increasing rates from the FOMC. We're going to start off with crude oil, not because I love crude, but because it has been an uptrend. It's re-entered the wave. And this move here gets my attention, not necessarily because I want to get into crude, but because I want a piece of the XLE, OIH, likely through Halliburton. Keep an eye on Halliburton, and the XOP. Now, there is no harm in getting long crude oil if you want to get long crude oil options, if you want to get long USO options, specifically calls, taking advantage of the move higher, the resumption of this trend. That's fine, but one thing that gets my attention is higher high, lower high, retracement. Not that this can't continue higher, but oftentimes it does start to signal this higher high, lower high, but still support in the wave. It oftentimes puts us into distribution, and it takes us out of the uptrend. And when you take a look at the JT multi down here, you take a look at this yellow neutral trend, you'll see that's really pretty much where we are. This is starting to look more like chop than an uptrend. But XLE, OIH, and XOP look like fantastic uptrends. That's why I'm saying use a futures first, commodities first mindset, but use that to then deploy capital in oil stocks, and those are in far better trends. Okay, second market, gold. All right, so with no NASDAQ, no S&P, no Dow. What's the next market I'm focused on? Gold. And you can see exactly where I'm interested in gold from. Thank you, Darvis. We've got this nice defined, I'll call it a borderline pullback or oversold support. We want to get long GC, MGC, or even GLD calls in this area. This particular test happened fast. I think this move happened right on the bell and was there for maybe less than 15 minutes. So I'd like to see another retest if at all possible. If not, we'll start looking at some volume ledges to figure out what a second choice for possibly a moderate or aggressive long position in gold can be. But that test right there, our low, as we sunk down into 1888, 1890, beautiful zone. Darvis defined. I mean, that's exactly what we look for as traders, relying on our tools, relying on the automation, which takes away the emotion, right? All right, next market, they're kind of related. Beans and corn, right? We're finally getting a pullback on beans and corn. And we're not going to see USDA, WASDE data until April 4 and April 8, I believe. But nonetheless, we have a pullback happening right now. I think this pullback, what I see, this pullback probably keying off of was the pullback in wheat. So wheat might have drugged these down, even though wheat has a completely different narrative than corn. Corn and beans, they have been moving higher with inflation. Wheat's moving higher because of the Ukraine. Remember, wheat was not moving higher before, see all this? Before the Ukraine narrative. And you can see the pullback here. That might have hit the corn and soybean market a bit. Now, those of you that don't want to trade the futures, which is fine. I mean, it's a futures video, but I always like to give everyone alternatives because we have quite a few people in the futures room that say, Rog, if we're going to take an overnight trade, I'd rather be in the options on the futures or an ETF that tracks with them. And that leads us to wheat, WEAT, corn, CORN, and soybeans, SOYB. These are all fairly liquid ETF options chains, Focus on the open interest. Don't go into an illiquid sub 500 OI. Look for the pullbacks. And when ZS, ZC, ZW are pulling back, SOYB, CORN, WEAT become viable alternatives. Again, choose your own adventure. So, of course, I'm going to at least throw this out there. You might say, okay, Rog, you gave us 4 ideas that have nothing to do with the NASDAQ, but what do you think happens next? I don't want to ever think about what I think, what I feel. That's even worse, what I feel. I even hear myself saying it, going, Rog, wait a minute. It doesn't matter what you feel. It doesn't matter what your gut thinks. This is not about your lower intestine putting on trades. We are coming up into quite a bit of previous Darvas resistance, not a lot of volume, and, continually an overbought market that has yet to signal the hook lower, right? This will likely continue into the end of quarter and then maybe into non-farm payroll this Friday. That means the beginning of my opinion of what happens next with the indices at this point, right? Having crushed the downtrend, broken the wave and continued higher through the 200 exponential that propped out as well. I have to acknowledge this market is not keying off levels that were part of the downtrend that I shorted 3 times before this happened. Okay. This is now a distribution chop, lots of FOMO, not an uptrend quite yet, heading up into resistance. And the beginning of this week, I think a lot of traders thought, we'll probably stop at the 200. I was one of them, right? Maybe we'll stall at that 200. Nothing doing. So we let that go. And we say the beginning of April really starts next Monday. That's when end of quarter is over. We're past the non-farm payroll of Friday. And then we have a different sort of shenanigans, not the end of quarter shenanigans, but what do money managers do with this sort of blank slate of an entire quarter to redeploy capital? All right, so that's what I'm seeing. Now, I also have noted there's been some very interesting and flat outflows in corners of the market you would think should be really, really strong. I'm going to go over that in the premium video, but this is what I'm looking at. Let's navigate around what's happening in stonks. Let's focus on the inflation narrative. If I were to add another symbol to this conversation, stay long US dollars or stay short the euro. Take a look at the 6E. I think that's a better way to play the long dollar. Of course, long DX will work, but let's continue to fade that 111.70, 111.80 area. The previous high we've seen back on the 17th. Let's look for that test like we saw today. Let's continue to stay short that euro, which is really a de facto long dollar position. As always, hope that helps. I'll see you all in Charts and Coffee tomorrow morning at 9 a.m. right here at the Simpler Trading YouTube channel. All right, gang, be good to each other. And if this content is moving the needle for you, if it's making a difference, smash that like button. And then also, if it's not, hey, leave me a comment, leave me a question, all right? I'll see you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.